Happy Sunday, ladies and gentlemen, Allincrypto here, and welcome back, guys. What is going to be nothing short of another jam-packed daily cryptocurrency market update with yours truly. What a week it has been, and we've been sure to be overly zealous in regards to actually doubling up our daily market updates, certainly on Monday and Tuesday, and covering exactly what took place. There was a lot of the Japanese yen carry trade unwinding going on, and the market saw the most volatile day/week since 2020, obviously the March 2020 events. And actually, the markets are still in pretty good health, and we think the economy also is. So we truly believe that this was just one step back in order to go multiple steps forward. We're going to be looking at that from a technical point of view. We're going to be starting the video off with a clip, I believe, from Yahoo Finance that talk about the possibilities of this being a bull trap, which we very much just believe it is. We'll be looking at Bitcoin, looking at the potential for this being a bull flag. Bitcoin very much in a kind of broadening structure, very kind of bull flag-esque. We'll be giving you some price predictions on the back end of this. Bitcoin may be setting up, and this sideways momentum may be setting up just a pullback that is ultimately going to lead to a run to around about the $100,000 mark. Now, we have a price prediction of $151,000. I do think potentially it's going to go above and beyond that, based on a broader pattern that we've been watching, but we'll put all that into context, and then we're going to be looking at a little bit of news. We've got news from Morgan Stanley. We'll talk about the market volatility, and we'll look at the VIX. We'll look at the sort of standing of the markets, and then we're going to be getting into the week ahead, because it's going to be a very interesting week ahead. It's a very interesting week that we're coming off the back end of. But in the week ahead, we've got things like PPIs, and of course, we've got CPIs, which is, of course, one of the Fed's main mandates. The Federal Reserve are on the cusp of going full sort of quantitative easing, or certainly lowering interest rates, easing those interest rates. And just like we saw the strengthening of a currency like the yen have a ramification, a negative ramification on the markets, we think there's going to be a positive ramification for the markets with the easing of the dollar. Certainly the implications that has for the Dixie, and then the implications that has for risk assets broadly. We think it's an amazing sort of time that we have ahead of us, ladies and gentlemen. I truly do believe that. My money is well and truly where my mouth is. And I want everybody to know about that. That's what this channel and these daily market updates are all about, helping you guys navigate what is a treacherous market. And it's well and truly my belief that last week was a great example of why I believe people shouldn't try and trade this market. They should just understand where the market's at in regards to its phase and what's to come, and capitalize off of that. And we think there's a kind of phase 2 uptrend ahead of us for the space generally, and altcoins really are yet to hear that starting pistol, if you will. So without further ado, let's dive into everything. Let's start things off with a clip from Yahoo Finance that are calling this a bear trap. We'll look at it contextually at a Bitcoin chart, then we'll get into everything we've got to be getting into with you guys. I'm going to go ahead and mute my mic. Let's dive into the
Well, Bitcoin is up more than 5% as investors look to regain some ground from this week's sell-off. Some traders believe the quick reversal suggests the recent price drop may have been a bear trap. Yahoo Finance markets and data editor Jared Blickery is tracking those recent swings. Jared.
Brad, Bitcoin is basically a trap. Let's check out the price action this week. It's been very volatile. This is actually a 3-month look, and you can see we just had this dip all the way down to about 48,000 there. And for me, 60,000 has been the important level to watch. And I'm going to zoom out here. I'm going to put a year-to-date chart on here, and here's the 60,000 level. We've dipped below it once, twice, and this is a third time, each time going a little bit below, but then climbing back above 60,000. These are all false breakdowns. You can call them bear traps, and it costs traders a lot of money and peace of mind. But nevertheless, that's what's happening. But another way to look at it, it's just in a little bit of a flag here from a sustained up move. That's a 1-year look, and it's even more apparent on the 5-year. So this is just a tiny little flag here in the grand scheme of things, but it's painful on a day-to-day basis. Now, when I was watching, I've been following fund flows as well. We have all these new Bitcoin, spot Bitcoin ETFs, and not only Bitcoin, but Ether. And we've seen some really positive movements this week. I think overall, the sector was lost about 250 million dollars or $250 billion. But when you take into consideration that a lot of that was out of the grayscale entities, you get a positive net flow for Bitcoin. So I think it's positive that we have, in the midst of all this turmoil, we still have a lot of institutional and retail interest in these funds, guys.
So I really don't think retail largely is here. Very low retail involvement, I think, in crypto generally. That's why we've seen the coins that we have seen, Bitcoin, Ethereum, Solana, do well, because they're very institutionally chosen, and we've seen lots of flows in regards to ETPs. Retail is still really yet to come, and this is how market cycles typically work. Retail doesn't get in until institutions have positioned. Yes, retail like me and you, and I am retail. I don't trade with hundreds of millions. Retail like me and you might be in and speculating on what's to come, but the general population, we've spoke about our own kind of barometer as a popular crypto YouTube channel, on certain topics like HBAR ICP, for example. We get some of the most watched content frequently. We're really at the forefront of content in regards to those altcoins and many others out there, even things like Solana. 10 to 20,000 people in the grand scheme of YouTube's 2.1 billion users monthly, or the 8 to 9 billion people that exist on the planet. There's an amazing kind of infinite growth that is still to be had in regards to users, population, and speculators. We also heard there that we'll talk about from a chart point of view in just a second, but he also talks about how it was a very volatile week. It was indeed, and actually when you look at crypto on a more zoomed out approach, which is what we like to do, we're not interested in capturing short-term upside or downside. We're interested in the broader trend. So we don't want to get people out when the market is selling off, because we think it's going to be, you're going to put a burden on yourself that I don't think many people can master, and that is getting out, getting back in, getting out, getting back in. I actually think you're going to make more money than traders in what's to come just by sitting in the move and being smart and in the right tokens. That's my honest belief. And I think the markets are in great standing. And I think given the fact that it was one of the most volatile weeks, and we'll talk about that in just a second, we'll look at the VIX and a number of other things, the markets are generally in good standing. It had everything to do with the yen carry trade. This is a pullback for Bitcoin. On this pullback, one nice thing to note is the lack of volume. You're seeing a declining volume into this. This is very much just flag-esque. Now, we have that $151 target for Bitcoin. Bitcoin's going to be the tide that rides and sinks all ships. We yet to see Bitcoin dominance roll. There's a beautiful picture that's being painted. Now, if you want to draw this as a bull flag, and we're going to take the bull flag from here to here, we're going to ignore this just here. Depending on how you measure your bull flag, some people like to measure it from the last touch on the lower band of support. Some like to measure it on the breakout, and we're yet still to break out, so this is rough. You could potentially, if we go off the last touch here, be looking at $130,000 Bitcoin. There's a number of ways you could draw this bull flag, so let's put them all on here. But I do think you're looking at a push towards that 100K. If you wanted to just take it from down here, you could do. I think taking it from where we've took it from is just fine. There's going to be a number of predictions that you're going to get. This one's getting you to 100K. I honestly think that once you break this, you are very much marching your way forward to that 100K mark, and then eventually that 150K mark, and potentially above and beyond it. So I think that is to come. The stage is very much set. We know on a macro point of view, I think we're in good standing. I think the economy is not doing as bad at all as what many people are saying it is. I know there's a lot of turbulence going on in the world. Certainly here in the UK, and I dare not say anything about it through fear of imprisonment. Literally, it's a very, be careful, all in, interesting situation that is taking place here in the UK. And I have got a lot to say on it, but I'll hold my tongue for now. I think a lot of people have a lot to say on it, in all honesty. But we are very much, I believe, looking at a pretty spectacular move, whether you want to use this as your kind of flagpole or whether you want to use this shorter one as your flagpole. I think this was the last sort of serious dip, which also coincides with our right shoulder for our head and shoulders. You are looking, I believe, at a pretty significant move. And let's put these targets on now to the upside for Bitcoin. And it's just waiting to sort of break out and complete what is very much, I believe, a bear trap. And if we look at the markets generally, it was the most volatile week since the something outbreak, which of course took place in March 2020. You can see this is the VIX. So let's zoom out on the VIX. Let's get rid of the 30 weekly moving average because it's not really needed here. This was March 2020. And look at the volatility you saw on the back end of this. So typically VIX down, markets up. It was more volatile than obviously what took place with the reverse repo that caused easing initially. And further back from that, we're getting to sort of 2008 levels. And I believe the market, certainly if we throw the S&P on, which is going to come up in a nice Bitcoin orange, is going to do very well on the back end of this. So when the VIX spikes, the markets go down. When it starts to come down, the markets start to go up. And we're seeing a real collapse in the VIX after an aggressive spike. All, again, I believe, caused on the Japanese yen trade. Certainly the Nikkei bearing the brunt of that. But there's more contagion for markets. And I think the Nikkei did a video yesterday where I talked about my macro reasons, and we're looking at technically what we're looking at here just for Bitcoin, but we could do it with the altcoin market. We could do it with the small stock market as well. We did it briefly yesterday. We covered in yesterday's video. Do go and watch that. Our macro reason for being bullish based on global liquidity, a main driver of that being the Dixie and its strength. And we looked at the fact that actually Monday was a great educational day because it really showed us the effects of strength in the Forex market and the ramifications that has on risk. And we're about to get a weakening, I believe, of the Dixie, which is the main driver, I think, of global liquidity. And that's ultimately going to be a good time for risk on environments. And crypto, I believe, is very much an uptrend against those risk on environments. We've looked at that a lot previously. And is going to really start to outperform. It's going to coincide with this sort of next run out of this bull flag, this kind of broadening channel that I think you're very much setting up to do. Talking about volatility, if you look at something like the S&P, for example, this, I believe, is just a pullback in what is a broader uptrend. You've still got to close this gap. We could see that coming on the back end of next week. On the topic of next week, it's going to be an interesting week. We've got UK employment data. That's going to be an interesting one to watch. We've got US PPIs. Expectations are for this to come down slightly lower than the previous one. I think the previous one was 0.2. This is coming out at 0.1. And then the big one for me, of course, is US CPI. And of course, you've got UK CPI. Now, if you look at true inflationary stats, these are essentially where the Fed and the UK government want them. We know the UK has already started to lower interest rates. The US is about to follow. That's going to ease the Dixie. We've got targets for the pound against the dollar, the euro against the dollar, and potentially the Japanese yen against the dollar, which all point in the same direction along with collapsing yields and forward guidance. But the expectations for CPIs are 2.9. That's positive data. I think really for me, I'm interested in just getting around to next month and seeing what unemployment comes out. Because once that scares out the way of, I think, and that growth scare, as Tom Lee said, I think the markets are really setting up for a real significant move. And the probabilities now are that the Fed cut rates in September by 25 basis points, 0.25%, and potentially it's about even with a 50 basis points. And the Fed typically cut rates at rather an aggressive manner in my own personal experience, or if certainly when you look at the charts, and no, a pivot doesn't always result in a crash. It did in 2000s and 2008. 2000s, it was already crashing when they pivoted. 2008, obviously the housing issue. We don't have those issues now, and I think generally data supports a good time ahead of us, and I think crypto is going to be the best performing asset within that. So that's it from me, ladies and gentlemen. Just a short, sweet, compact one. Interesting clip to start the video off, one that we thought was worth sharing because we very much agree with it. We saw from JP Morgan and Goldman Sachs, they both reported that institutions bought the dip, very crypto kind of phrase. We also saw from Richard Teng, the Binance CEO, that we saw, I think it was $1.2 billion worth of inflows in cash into Binance, suggesting they bought the dip. It's going to be very interesting to look, and we will look at it tomorrow at CoinShares report, and of course report on that for you on a magical Monday. So that's it from me, ladies and gentlemen. I'm going to love and leave you on that note. If you've enjoyed the content, like us, appreciate it, so as a comment. See each and every one of you in the next YouTube video. Thanks a lot for watching, guys. See you in the next one.